Home sales in San Diego are down as low inventory and high interest rates continue to weigh on the market. Hi everyone, it's Deva and Eric with Compass, and we're back with another San Diego real estate update.
Yes, so let's take a look at what's been happening over the past few weeks, and then we'll zoom out to check out the longer term trends.
All right.
Looking at what happened between October and November, there was an 18.7% dip in new listings, a 15.4% drop in pending sales, a 14.6% drop in closed sales, almost 9% increase in the number of homes for sale, and a 0.4% increase in median price.
All right, well, let's check out some long-term trends, and let's start with new listings.
Yes. Checking out new listings over the last 3 years here, looking at 21, 2022, and 2023, it has just been a race downhill, a downhill drop on this roller coaster. Although one sort of anomaly has been an increase in the number of condominiums for sale over last year. I've been seeing a lot more condos being listed, and I don't know the reason for that, but that did happen over the past last couple of months. We've seen more condos, and then year to date, same story. It's a fairly staggering drop when you look at year to date numbers. It's off 32% for detached homes. And then again, looking at the long chart, as we say, month after month after month, we have a nice regular market heartbeat, if you want to call it that.
And then
2019 into 2020, things start to get a little weird, and now things are just sort of in the tank when it comes to activity.
Not good as far as volume goes.
No, and that's a weird thing because folks ask me all the time, how's the market?
Well, it depends.
Right, exactly. It depends on who you are and what your goals are. If you're a seller, the market is pretty good.
For now.
For now, because there aren't that many homes being listed, and the ones that are being listed are still getting absorbed.
They're getting snapped up fairly quickly.
Right.
And we've got the supply and demand dynamics going that are keeping prices high for now.
Yes, and median price, bounced up a little bit. So, that's sort of stagnant for the moment.
All right, let's talk about closed sales.
Right. So if we look at closed sales from 2021 to 2022, I'm just looking at the detached numbers here. The attached is similar. We were off 44.5%, and now another 16.5% in 2023. And this affects a lot more folks in the overall economy than just real estate agents and lenders. This affects a lot of tradespeople. We've run through the list before.
Termite people, painters, roofers, carpet folks. You could go on and on.
Yeah, home inspectors, sewer camera guys, folks. Lots of people are
landscapers.
Yeah, it affects a lot of people because a lot of people work when homes get sold, and a lot of people don't when they don't. So that's really going to start showing up at some point. I can't believe we're not hearing about this in the media chatter, but maybe we are the media chatter. I don't know. So that's what's going on with closed sales, and then year to date, it's a similar story. And of course, when you look at the long-term chart, it's the same thing that we've been saying again and again.
All right, well, let's look at inventory of homes for sale.
Right. Now here's an interesting, I guess you'd call this a bright spot, sort of, although you look at 2021 to 22, it jumped up 75%, almost 75%, and now up another 53% from 2022. But look here. So this is like a more normal number of homes for sale when you go back to 2019, and then you see a really steep drop off right here, and then another drop here. So this bump up here doesn't even begin to touch where a normal real estate market was, or a more normal real estate market was.
If you look at this long chart, we're actually now creeping into territory that we haven't seen for a few years. So, if you're thinking of selling, check out this chart. Inventory is gradually building. It's still low, but these supply and demand dynamics are going to start shifting if inventory keeps creeping up like this.
That is true. It has been creeping and creeping and creeping for a few months now. And yes, once we start getting into more normal territory, these rates and it's not going to favor sellers. So, if you're sitting on the sidelines as a seller, I would pay very, very close attention to this for sure, because this is definitely showing a trend.
All right, well, speaking of prices, let's check out median home sales price charts.
Right, so here we have not the greatest news for buyers, although rates are down, so I don't really believe that the bump in median price is really affecting payment that much right now. Maybe a little bit, but I think overall probably not. So in November of 2022, we had actually just lived through the initial rate jump, and so median prices actually went down about 15% last summer.
Yeah, that was rough. We had a couple of sellers that took a while to move their homes along because rates jumped up and buyers were sitting on the sidelines.
And a couple that took a pretty good hit that probably wish they would have waited 2 or 3 months, but you can never predict
or
that.
Sold sooner.
Yeah. So looking at 2022 to 23 here, we were low and then we bounced back, and now we're at 980. So almost back to $1 million median sale price. It has been sort of vacillating the last couple of months, up and down. So it's fairly stagnant, and probably, my prediction is it sort of remains that way for at least the next few months. But again, if that number of homes for sale continues to rise, median price will drop off very quickly, as we saw last summer, all the way down the hill, and it did not take long. It was just in the span of a couple of months, 15%, and that's a lot of money when the median price is $980.
All right, is it time to talk about interest rates?
Well, that's somewhat of a bright spot.
The news is less bad.
Yeah. I mean, I can remember a few months ago when I saw 7.03 and went, oh my God, this is awful. But
now we're like, okay, 7.03.
Yeah, 6 months or 6 weeks or so ago, we were talking about 7.89 or very close to 8, which was really scaring people. So now the last week we're down at 7.03. It would be nice if rates would go down more, although I don't see a lot more downward pressure on rates. But at least when you're scraping down into the low 7s, we're within striking distance of, rates in the 6s or 5s. If we can structure a deal for a buyer, correctly, you can buy your rate down and have, somewhat reasonable rate. And, rates in the 2s and 3s were very abnormal. So we're actually kind of entering a more normalized rate environment when you look at history.
And I should mention this is a Freddie Mac chart.
Freddie Mac.
Yes. Thank you, Freddie Mac.
Thanks, Freddie. Maybe we'll show you a Fannie Mae chart next.
That's true. We're kind of favoring Freddie.
We are. I
don't
think
give
it's gonna,
Fannie a little love too.
Right. I don't think it's going to look much different. But,
no. Okay.
And they're I like the colors.
Oh yeah, they are
chart.
nice. All right.
Yep.
We're good for now.
Yeah, that's what's happening.
All right.
Send us a message, give us a call if you have any questions, and we'll see you next time.
All right. Well, if you enjoyed this content, please like, share, and subscribe, and we'll see you next time.